Okay, let's go straight over here to the grain market and see where we're trending here on this Monday. First day of the week, first day of the new trading month as well. And we started out with a lot of weakness here, and that spilled over from the overnight trade. Right now, we've got March down 3.5 at 377 3/4. The December is down 1 3/4. In the soybean market, things have turned lower here again, with March now unchanged. May down 1/4, July's down 1/2, and those other contracts are unchanged as well. Very quiet and very weak. Now, March Chicago wheat is down 1 1/4. July is down 2 pennies at 5.50 1/2. Kansas City wheat for March is down 3 cents at 4.62 1/2. July down 3 1/4, 4.76 3/4. Minneapolis wheat, that market is also weaker as well. The March Minneapolis contracts are down anywhere from 2 to 3 cents as well. So weakness for Minneapolis wheat, and also cotton on the weak side here today as well. Also want to look at crude oil. Crude oil today down 122 at 50.34, got as low as, well, looky there, 49.92. And Todd Horwitz, Bubba Trading, here with us to talk about this as well. Todd, for the longest time, you said this crude oil market could go back down and test the 40s, and we certainly have done that. Was that because of this coronavirus, or was it something else at work?
Good morning, John. Well, I mean, there's a lot of things at work here, but you slow down transportation into a market that's already got a glut, okay, which oil isn't a glut anyways. So you're going to stop usage, which is going to build a higher supply, so prices are going down. But we were significantly overpriced to begin with anyways. The last big rally was all based on fear, and of course we know fear sells, and once fear is gone, we saw the prices drop. And I think now you could go down into the mid-40s if this continues now. Now it looks like it could really get bad. You've got even Saudi Arabia trying to cut production right now, and still prices are $1.20 lower. So to me, it looks like we've still got a lot of room on the downside.
Todd, what about the weakness over here in a lot of the commodities? Because you and I were talking about this just before we went on the air, about the weakness all the way across the board relating back to this coronavirus.
Well, I think that's a problem, John, because, again, it stops imports and exports because of the virus, so it holds everything up. So what we're doing now is we're building more supply with really no place to sell right now other than here until we get a resolution on the virus. So this is the one time when I will look at some of the fundamentals. And certainly, if you look at soybeans, they have been just under so much immense pressure. And yet today, the best they could manage, I think at one time they were up 4 or 5 cents, and now they're back down again. So that just shows me how much weakness there is in this market. And again, at some point they will turn around. And if I was an owner, I would certainly hold here. But it certainly doesn't look very good at the moment.
Todd, one of the other things that you frequently talk about is the VIX index, or that level of fear that's traded inside the market. What is it showing? Has it given us any kind of direction here today?
Well, the VIX is showing less fear today than it did Friday. Actually, it's sold off quite a bit, and that's what happens when the central banking system gets involved. The People's Bank of China, okay, infused $174 billion into their system overnight, which is what caused our equity rally right here. But you can see the equity rally is weakening rather quickly here, and it wouldn't surprise me to see it lower. But again, I don't see the money flowing into the grain markets yet until we can see some movement on getting rid of the stuff, because again, what we're really doing now is building just a big supply without any place really to sell it yet.
Todd, I do want to ask you about that money flow when it comes to the livestock. We're going to do that straight ahead right here on the Market Day Report. Let's go to the live cattle market, sometimes referred to as the fat cattle market. The front month is this February contract, and it is down 35, 121.03. April is down 27 at 119.40. Feeder cattle for March down 205, 134.03. April down 168 at 135.85. And February hogs, the front month down 83. But Todd, look at this. April is up 75 at 62.35, and the May up 113 at 71.15. You go all the way out to July, and we're up 205. Is this spread trading? Is this optimism that maybe this all of this pork that we have on hand will eventually find a home? What do you think's behind this?
Happy days are here again, and we got a new Canadian audience. What more could you ask for? So, of course, the hogs are going to show off a little bit. I think you're getting a little bit of a bounce here. Again, I'd like to see them find support. I like the action now. Obviously, February hogs are down significantly, but they come off the board very shortly. It looks better. It looks like maybe we can find a bottom here. I do not want to see a straight limit up move. I want to see a support built here, and then I think it will resolve itself out. But again, we run into the oversupply, the lack of being able to transport them, and all those things going along with it. So I think that's the problem. And I think that's also the issue in the cattle markets, John, at the same time. Right now, they just continue to go down almost every day.
Absolutely. And last week we had weaker cash cattle trade, lower cash cattle trade, anywhere from $2 to $4 lower across the board. I haven't heard anything this week yet. Of course, today is just a show list day. But if we would continue to take this cash down, does that send a signal to the futures, hey, we still need more of a correction?
Right, and again, I think we do need more of a correction. My only concern when we get to these kind of levels, John, is that some outside third parties get involved in forced liquidation, which of course would form a bottom, but it doesn't feel good for the people that are getting liquidated out. And so we need to find some support pretty quickly here, almost across the board, because again, we know how the lenders sometimes get nervous and force you out just before it's time for them to turn around. So I think we've got to find some level here where they're going to hold. But right now, I mean, in the cattle markets, for a week, they've gone straight down almost every day. Same thing with hogs. So once we can find and locate a bottom, I think we'll be in real good shape.
I got 20 seconds here. Any thoughts on the dollar, Todd? Because you watched that pretty close.
I think it's going higher. I think it's going to par. I think that is going to be one of the fear assets that are going to be played. And when we start to see some fear come back into equities, money does run to the dollar. And I think that it will go to par. I do not think it'll affect the farmers, though. And I don't, again, markets are very funny. They pick ways to go. I would not be worried about the dollar right now.
Okay, Todd, sure appreciate it. Hope you have a good afternoon. And that's Todd Horwitz, Bubba Trading.
Thank you, John.
He is in Redwood, Illinois, Christina.
Always brings a little excitement with his
He does. He truly does.
Thank you, John. Appreciate that.